Hello, and welcome to episode 4 of the Gold, Goats, and Guns podcast. My name is Tom Luongo. It is Sunday, May 7th, 2017. And our discussion this morning is going to be about, obviously, the French elections. So I've got a lot to talk about that and a couple other things looking interesting in the currency markets. And let's get to it. All right. So today really is a referendum on authenticity versus fakery. And at the end of the day, regardless of whether or not Marine Le Pen wins today in France, she will have won overall. And it's the same argument that I made about Geert Wilders in the Netherlands. Even I would have made that same argument had Brexit lost last year. The idea that the European Union is forever and is an inviolate thing, that political monstrosity that cannot possibly be challenged by the evil forces of populism, is complete and utter nonsense. The truth is that the EU which was designed and created to end the age-old tribal stripes within Europe, the tribal conflicts within Europe, is because of its horrible structure, which in effect advantages Germany and the Netherlands and the Northern Bloc at the expense of everybody else, is exacerbating and bringing all those old tensions back to life. No matter how much they try to put a veneer or coating of identity politics and hand-holding and all of this and all of this communitarian rhetoric on top of it, because the truth is that beneath that communitarian rhetoric is a nasty, evil, vile totalitarianism that is the worst kind of the worst kind. It's the worst kind of technocratic tyranny that was described really quite accurately by George Orwell in 1984. That was the important takeaway from 1984. Is that it was a totalitarianism that was kind of mechanistic and technocratic and bureaucratic. And the people who run the EU are unelected. They're bureaucrats. They're at best technocrats. They don't believe in anything other than what they can prove through the false application of positivism. There's so many things wrong with the EU at a fundamental level that they keep trying to sell us on the efficacy of it and the advantages of it, when the truth of the matter is that everybody who actually has to support this unbelievably ridiculous monstrosity is hurting. And we see this all over Europe. And Marine Le Pen is no different than Nigel Farage, and no different than Geert Wilders, and no different than Donald Trump. Every one of them, and before all of them, no different than Bernie Sanders or Ron Paul. And ultimately, this started with Ron Paul, the first honest-to-God politician who walked onto a Republican primary debate stage and was an authentic human for the first time in, 30 years, was a lightning bolt. And it's that authenticity that is the important part, because we've gotten to a point, and I could do a generational analysis on this, and I will another day, but we've gotten to a point where we can look at what we're seeing on TV, and we know they're lying to us. We know fundamentally in our heart of hearts that they don't have our best interest at heart. We know this. It doesn't matter if it's the media or our politicians or whatnot. The Gen X generation is incredibly sensitive to this. We're hard-bitten cynics, especially the ones born like me in the 1966 to 1972, 73 range. Certainly the ones that were born pre-Star Wars, not the end of Gen X and not the beginning of Gen X, like my brother was born in 63, or some of my younger friends who were born in like 77 and 78, who have more in connection with the previous generations around it. But the ones who, all of my peer group, the people I graduated high school with and I went to college with, we all have a very similar attitude, regardless of our political bents, regardless of whether we're hardcore libertarians like me or hardcore Marxists like some of my friends. There's a fundamental cynicism and distrust of everything around us that leads us to the conclusions that we draw, even if we draw completely different conclusions. And that speaks well of Scott Adams' discussions about the same movie or the different movie playing in two different brains, right? That the whole idea of seeing the same information and two people watch the same information and construct completely different narratives in their heads. And this is what I've been doing for years for Newsmax at the Resolute Wealth Letter, is to debunk these false narratives, both at an economic level, a monetary policy level, and a geopolitical level. And this is why it was obvious to me that all of these Eurosceptic movements would coalesce at a certain point in time. And it began with Ron Paul in 2008, and it grew in 2012. And interestingly enough, and this is something that we tend to forget about this. We talk about it with the Bernie Sanders movement, where the millennials got behind Bernie Sanders, the younger generation got behind Bernie Sanders. But really, they're the same people who got behind Ron Paul. It was Ron Paul, energized the nominally quote unquote right wing libertarian youth, and then Bernie Sanders awoke the nominally left wing kind of Marxist, social justice warrior left. But it's the same thing. It's the same movement. It is absolutely the same desire to not be lied to anymore. And that's what this election is about today. And it's just as apparent here as it was back in November when you had the choice between Donald Trump, for all of his faults, and Hillary Clinton. Donald Trump is a terrible public speaker, but he's authentic. Like him, love him, agree with him, disagree with him, doesn't matter. The man is who he is, and he is his own man in every way, manner, shape, and form. Some of that is good and some of that is bad. That's fine, but he is his own man. Hillary Clinton worked really, really hard to try and tell us that she wasn't the vile, disgusting, authoritarian. I don't want to use the words I want to use to describe this woman. She is just a soulless, as I said before, a soulless Machiavellian harpy with an entitlement streak wider than the mainstream media's credibility gap. And it is that authenticity gap between Trump and Clinton in November, and now Le Pen and Mr. Macron today in France, that will define this election. So I think that this is another interesting moment in history. And so even if she loses here, she wins. And the reason for this is, now I'm going to tie this to the euro. The reason why this is important is that the schmucks in Brussels, the Junckers and the Martin Schulzes and the Donald Tusks and the Angela Merkels and the rest of them, and the ones who boo and hiss every time Nigel Farage opens his mouth, those guys will take this, if she loses today, as a signal that they've beaten back this momentary spasm of populism, and they'll feel vindicated enough to continue doing exactly what they're doing, thinking that, well, we had an election and they got a little angry and then it all fizzled, because that's what they always think. But they don't understand that this is so much bigger than populist movements in the past. This is so much bigger than 2008, so much bigger than 2012. It's reaching a crescendo here. I don't think we're done yet. And if it doesn't culminate in Marine Le Pen becoming the president of France today, I got news for you. Mr. Macron is not going to last his full term in France. I already read a couple of reports that she's not going to win, or opinions who say she's not going to win today, but she's going to win in 2022. Nonsense. Macron will not, if he wins today, mark my words, he will not last 5 years. There will be snap elections in France, regardless of whether the French Constitution calls for it or not. Something will give, and it will be ugly, because it's that ugly now. When Francois Mélenchon can go from practically no support to 19% in the first round elections simply because he positioned himself farther on the Frexit spectrum than Mrs. Le Pen did, that's a very, very serious problem. There's over 40% of the people who simply just want out of the euro, and they don't care. Over 40% of the voters in France don't care. And so I'm recording this now while we're just getting some early numbers about voter turnout, and voter turnout is extremely low, which is in Le Pen's favor. So hopefully, by the time this gets published and everything else, I will be able to say, hey, it's great, Le Pen won, but I'm not sure if it's going to happen. All right. So, and then by tying this to the euro, my point is that they will take this as the signal that they were correct. And because they think they're correct, they're going to continue on the same policies that's destroying Europe and destroying the EU as we speak, which will ultimately destroy the euro in the end, and will cause even greater havoc than it has in the past. Martin Armstrong's been making this point, and I absolutely agree with him, that in the long run, the euro is doomed. The question is, to what level? And if she loses today, I'm thinking 70 cents, maybe even 65. And if she wins today, maybe 80 or 85 cents versus the dollar in the long run. Regardless, I am convinced that we're going to have some kind of spasm in the euro coming in 2018. So it's going to be very interesting there. And then something else I saw this morning on Zero Hedge just before I went live with this was that there's a real disconnect happening between Chinese forward rates, Chinese yuan forward rates, and the yuan itself, and that is a good indication that we may be getting a devaluation in the next couple of days. So next week or two. So let's see what happens there. All right. So, and I'm going to show you those charts, and we'll go on talk about it. I don't really have an update to the gold chart because I did a podcast on Friday. Gold didn't really move from the time that I talked with you on Friday. So this weekly close here at the 1230 level is dangerous. It's good that we held say that bar there. That's good, but it's kind of good in the hemlock is better than strychnine sense, not really in any kind of good technical sense. I really think that we're setting up for a pullback to 1195. We'll see what happens after Le Pen, the French results today. Anything can happen in the gold market at this point, but the bias is absolutely bearish. Okay, so moving quickly on to the euro. So this is what I want to talk about in the euro. So what we have here is, so this is the downtrend, right? And this is a monthly chart on the euro. And this is the 3-month downtrend. And this final bar here, we got a spike low and a bottom, and this bottom here holds, even though it's a lower low than we had back in 2015, right, or 2014, right? This, which is very bearish, and sets a bad precedent that really all of this is kind of an extreme short covering rally here, because we didn't get a 2-bar reversal, right? We didn't best this high in either of these 2 months, and then we didn't get it. We did best it, but didn't close above it in that would be March. We finally bested it in April, just barely, and we're getting some follow-through activity here. And this is mostly on the hope that Mr. Macron is going to win. If Mr. Macron wins, I would fully expect to see a move in the euro this week or through May up into this $1.13 level. But if it can't hold that level through the end of the month or through the end of the quarter, then we're going to get a crash later in the year. But we could see a move up to as high as 113, and if we do, that's a very good opportunity to short the euro. And obviously, if it breaks through 113 on a monthly closing basis, then I would close any shorts you have in the euro, because it's probably going to go back to 116 or something like that before it finally starts to crash. Okay. So that's the situation there. I'll update you as we go along over the course of the next couple of months. So that's very important to understand that this what I'm trying to say here, the ultimate takeaway is that this is a very weak rally, and it's going to need to break certainly this high here and then that high here to even think about changing the long-term trend of the euro, which is very bearish. So there's a lot of room to the upside that can happen here within as a kind of counter trend bull rally in a primary bear market. So don't be worried about that. Pick your spots. And so if you're picking your spots to short, this would be 113 and 116 would be your positions. If Mrs. Le Pen wins, the euro is going to drop like a rock tomorrow. So if you're positioned short the euro right now, on the hope that she is going to win, because there's some high risk to reward there. I mean, there's some good pot odds there, right? Just be willing to bail on that position really quickly, because you could be underwater very, very, very fast. I mean, if you're playing something like EUO, it's not a big deal. But if you're playing the currency market, you can get wiped out really quickly. I wouldn't be. I'm not positioned here, and I wouldn't be. That's way too much risk for me. All right. I'll talk about those trades, but I won't make them because that's just insane. All right. So the last thing I wanted to talk about was this the situation that's coming to a head in the Chinese currency markets, and Zero Hedge was on this morning. There's a lot of other stuff on Zero Hedge this morning that I didn't find all that interesting, but I thought this was that you have this bifurcation here between this disconnect between the dollar yuan pair and 1 year volatility, and you'll note that this when this happens, there's a very good possibility that these two things need to correct to each other. It would make some sense. The China's credit markets are a mess, and I know the Chinese are trying really hard to hold the yuan in place. And you note that when they held it in place previously, and you had volatility spike down like this, that ultimately at some point you're going to get a snap higher, and it's not. This is not a stable situation given the status of their currency markets at this point. So just wanted to bring this to your attention because what will happen then is if China does have to devalue here, up to 7 or 7.05 or 7.1 or something like that versus the dollar, the Trump administration will be all over that like a rash. And I honestly think that at this point in time, Trump is thinking that this is part of what he means, and he and Rex Tillerson mean when they say that they've made some headway in discussing trade issues with China. So Jinping will do what he can to honor that wish. But the truth of the matter is that markets are bigger than people, and markets are bigger than the PBOC, and they're bigger than the Fed and everybody else. So especially when we see how much money and how much liquidity the central banks have pumped in to capital markets so far this year, which is to the tune of more than $1 trillion, according to another article right on Zero Hedge. That's a tremendous amount of money that hasn't actually anybody gained anything. So we could be coming to that, what you would call that Minsky moment, where faith in the whole system could start to tumble, and that's what's going to cause the next crash. I don't know when that's going to happen, but it's definitely baked into the cake. All right, so that's what I've got for you this week for this Sunday. We'll talk again in a couple of days. Watch to see the euro. If the euro can close next week above $1.13, you're probably looking at a rally to $1.16. We're looking for gold to hold this 1230 area. Not high probability, but it could happen. And if it does, it would be good. And let's see if we get a shock devaluation, and I'm making the air quotes, which you can't see, in the Chinese yuan. All right, so that's what I've got. You guys take care. Have a great couple days, and keep your stick on the ice.